Regarding North Korea, there will be collateral damage. There will also be some winners. Ricate Highen. China industrial production is out and was 0.8% off the forecast. What picture does this paint for the global markets?
Well, the figure itself is not as bad as one may think. I mean, we're talking point percentages below the consensus. But what you have to see and finally realize over a long period of time is the fact that the outlook of the Chinese economy is just changing. They're still working on their domestic demand. This is something that they have been discussed for years. We have to keep notice of this. Also, you have the inclusion on the equity exchanges, indexes, global indexes, more than 200 equities on different Chinese exchanges. So things are adapting to a new reality. That's what we have to look here. Also, you have some notes in how actually China has been using North Korea as far as their manufacturing. We cannot deny anymore that labor costs in China is not competitive as it used to be 10 or 15 years ago. So they have made their own changes. Nobody knows, but everything is produced as far as the textile industry has been produced in North Korea. And actually, you just put the label made in China, which has been an ongoing situation for years now. Of course, this is telling you that there's a slowdown. We cannot, just try to cover this situation. There's a slowdown in manufacturing. And I think at the same time will be an opportunity for other places like Vietnam, for example, or Cambodia to go up in the list of cost-effective labor when it comes to replace China.
The week started with Japan's second quarter GDP data. What did this data tell us, and how will the political tensions with North Korea affect the next reading?
Well, the new data that has everything else is just an indication. It can serve as guidelines as what to do next. And I don't expect such a major change in the data. One thing for sure is that they want to keep having a balance when it comes to the Japanese yen and how that will affect its own currency. Long term, there are a couple of plays that I think will be valid for a lot of traders. In that case, you can take a position long in the euro against the Japanese yen, as well as there's still some hope for the Great British Pound against the Japanese yen. Now, the tensions, when it comes to tensions and all the messages that you get on Twitter or any other media source, at the end we have to think that you have a lot of countries in the middle that will prefer to talk things and help dilute any potential nuclear war between these two players. I'm not thinking that North Korea can be other. So you have to make sure that as in any conflict, international conflict, although we may experience some collateral damage, also there will be some winners. Probably I will say that Putin is actually having fun with everything that is happening at the end of the day. As far as equity exchanges, what the audience has to know is that whether you like it or not, this conflict is creating some short-term dips into equity exchanges, especially Dow Jones. There's some research that we can have finally an opposite of what everyone is expecting. Rather than having a meltdown, we will have a melt up. You can see the Dow Jones trading as high as 50,000, and that sounds way crazy. But any conflict, any blip in the middle of what is taking place right now in the new world economy will be of a buying opportunity for traders and investors in the long term in these exchanges.
On Wednesday, we will have the US crude inventories. Will this data cause another boost in oil-based currencies?
Well, it's difficult to change the outlook when it comes to oil and what to expect. You always have Goldman Sachs adjusting their forecast. One day it's to the downside, next day it's to the upside, because we just don't know. The data itself is becoming irrelevant when it comes to what we have to play with. There are a lot of companies hedging their production. If you think about it, around 50 per barrel. And then the other side of the coin here is the fact that most of these companies, they found a way to be very cost effective, very productive, very efficient with oil below 50. You will be surprised that some companies have made more money at this time of the year that they made it back in 2014 when oil was trading around 100 per barrel. So having said this, you have to just sort of, open your eyes. The audience has to know that the whole thing that some companies are expecting or this oil to trade back to 100 is not really necessary anymore. So I will just move aside of the inventories, the figures. They always matter at some extension, but what you're looking here is exactly the production, the follow-up, countries like Libya, Venezuela, Mexico. What exactly is the production doing there? And you also want to have an eye of the commodities trader commitments of trade report, exactly to know what large speculators are doing versus non-commercials, commercials. That's where you want to put an eye and keep it. You just pay attention to the data right there.
Well, thank you, Jose Ricate Highen, for speaking with us today, and thank you at home for clicking back. Don't forget to subscribe for more interviews like this.